And then we have Marina Zucker, a researcher from Global Policy Center from the Boston University, who's going to analyze the role of trans-border payment systems, it's in yuans, which is one of the more advanced outside of the dollar. And she's going to explain the experience in China, the international implication of the RMB as an international currency. And well, this is one of the more advanced cases of alternative to the dollar. Then we have the valuable comments of Ana Garcia from the Universidad General of Rio de Janeiro and member of the Rich Policy Center. So this space is aiming to generate an open dialogue. So feel open to send your questions via the chat. I'm going to be taking them. And in the end, we're going to be having a brief Q&A session. So we're going to continue with our first panelist, which is Marcelo. Marcelo, thank you. Thank you so much, Jorge, for the introduction. For me, it's such a luxury to be here with such big speakers and in such an important topic. And with the recent publishment of the paper, I'm going to share a PowerPoint with some ideas, some insights based on the paper. I think that you can see it now. Um, the PowerPoint is about, well, the presentation is about the regional payment agreements, mainly in Latin America. And mainly what I analyze in the article that you're gonna have to read, and as Jorge mentioned, it's already available in the Latin website, to whom I want to give thanks. Um, it discusses what it means to have a regional financial and monetary cooperation. Well, during the first part of the 21st century, from the 2000s to 2010, there was a lot of literature. First, lots of literature thinking that Latin America could prevent or could imitate the Eurozone. We thought of it as very successful. In Latin America and Argentina, we have Mercosur, and in other places of the region, we thought that we could have a common currency like them. In another moment, from a different perspective, we thought that we could have a regional uh, financial architecture that could replace an international financial architecture. There was a lot of literature regarding that, lots from Nepal, from a more like different perspective because they understood that international financial architecture was problematic for Latin America, and the regional one could, in a way, be a defense against it. And there was a proposal of creating the Bank of the South, which was a proposal. But it was complicated because it was created with one purpose, but then it ended up being something else. And in all of those things that were happening, there were different discussions about the regional financial architecture, and there was different literatures coming out, some more orthodox and some more heterodox. And within those heterodox, there were some more neo-credentials, false credentials of different kinds. And in that mess, in that heterogeneity of agreements as to what the financial cooperation is, we kind of got lost because they were talking about regional financial and monetary cooperation, but very different things were being mentioned, which is why I thought that in this article it was important to recover one of those things, which I think is particularly important in this context, which is the regional payment agreements and separate that the regional financial and monetary cooperation is not the same, that is so heterogeneous. And here we're talking about something specific. And it was important to declare that after all the literature that we had 10, 20 years ago, and that today are we're starting to have again. So these regional payment agreements or RPS, we can see it in a graph that was taken from a report from the Society of Nations, or League of Nations, sorry, in 1935. when they were discussing bilateral agreements in the 1930s. And here we see that there can be a transfer of assets or export of assets from one country A from a country B and and back. And there's no payments between countries. There is a central bank in country A, which is the clearing office, and then a central bank in country B as a clearing office, and simply the importers pay in local currency to the clearing office, and the clearing office is going to make the payment to exporters in their local currency. The hurdle here is between both countries, between imports and exports, there needs to be a balance. And that is the biggest hurdle in the 30s when these agreements were bilaterals. And it was tried to be overcome through the agreements in the European Union with payments after the Second World War with multilateralism. Multilateralism helped overcome this issue with the balance not having to be balanced. So the idea here is pretty clear with the League of Nations, and it catches my attention, the clarity from 90 years ago. So what are the advantages? What are the RPAs for? Mainly for two things. One, to promote interregional trade, and the second one is save currency, save reserves, save hard coin. So for the first one, what they do is they reduce transaction costs because for any importer it's much simpler to pay in their local currency than having to use an exchange market and make an international operation, which is costly. It's just a domestic transaction as if they were paying anything locally. On the other hand, there's a facility to buy, a tendency to purchase goods from the country with which there is a net credit balance. I'm not gonna be importing currency, so with which there's a discriminatory bias to the rest of the world. And this facilitates reciprocity because any agreement of trade, where regional of trade, in general, what happens is that, for on the one side, the countries try to trade between each other, and that means that there might be a country that has a superavit balance and another with a deficit balance. And this agreement facilitates reciprocity. So the acquiring country or the acquirer country has to buy more from the other country in order to balance the accounts in the regional trade. And on the other side, in terms of the saving of currency, obviously, insofar as it's not necessary to pay imports in hard coin, there's lower hard currency liquidity requirements for transactional motives because we simply need to pay net balances. We don't have to pay each import, but just the net balances when there's a deficit balance. And it's done after an accounting period. It's not done every day, but after an accounting period of 4, 6 months, or 3 months. So it's paid after 3 months when the balances are netted between the two countries that are trading, with which is much lower to the requiring of currency is much lower. And that is why RPS were in demand for many years. So a bit of history. These regional payment agreements, there's three phases. Clearly, the first one was the moment where they really expanded in the 1930s in a context of exchange control, a context of a lot of trade protectionism. They expanded a lot in general in countries that have an agreeing balance and, and a debt balance in other countries, and the accruing country tried to balance those accounts with the debt balance with these clearing agreements. And then the authors take this experience from the 1930s and they're gonna make a proposal of an international currency union that is not gonna move forward as we know, with the wide ideas centered in these agreements. However, from the golden age of capitalism, uh, I had other multilateral RPAs, and the main one was the European Union of Payments. And in particular, we're gonna have the Convention of Reciprocal Payments from the experience of Nadal in 1975. And there's gonna be other multilateral agreements. And these agreements are gonna be quite successful in general terms, as we're gonna see. And finally, we have other agreements created recently that are more diverse and smaller, less clear. So we needed to separate the three phases. What do we have in Latin America? First, we have the Convention of Payments and Reciprocal Credits in the framework of the ALALC and ALARI in 1965. The system of local currency payments in the framework of Mercosur, which is bilateral, very simple, which is good, but at the same time, it's pretty limited in 2008. And then in 2009, the Unified Regional Compensation with different payments such as Ecuador. And as you can see a little bit with this agreement, what's been happening in the last few years is that practically the use is very limited beyond the convention of payments and reciprocal credits. It was pretty successful in the beginning, in the 60s, 70s, 80s, particularly in the debt crisis framework. But then the use now is practically null, particularly in the 90s. It was left aside from the Convention of Washington. And with the local currencies, we can say the same thing than the others. What happened is that there were a lot of asymmetries. The payments in local currencies are bilaterals, but these are these are imports from Argentina, from Brazil to Argentina, but there's no many imports from Argentina to Brazil. And this in Sucre, we had the same thing. So the imports were from Ecuador towards Venezuela, but there was no from Venezuela to Ecuador. For this reason, due to this asymmetry, all of the Ecuadorian importers wanted to charge in hard currency, and Brazil has a more stable currency than Argentina. Therefore, the Brazilian exporters wanted to charge in their own currency, and the Argentinian didn't. So these recent schemes have a lack of symmetry, and therefore, in this little time that we have to talk, it would be good also for you all to read the article to reach a greater development and conclusions and continue to discuss these issues is that mainly the RPAs are not simply a tool. They need to be a policy that complements other policies, such as financial development and other policies where it's necessary to administrate external trade and regional trade. I think that's interesting because many times we think that this is a policy in the framework of other policies that have to do with economical development. And we cannot think about RPS in the framework of openness, financial openness, because in the RPS there are different rules. Then the RPS should promote new regional trade flows and not necessarily discriminate or change trade in a way from one country to the other, in the same sense that the money has an endogenous creation and promotes the production of the countries. We can also think that the RPAs are endogenous creation of money and they should help the production of the countries that use them. And lastly, in this context of such a great dispute that is happening globally in monetary terms and financial terms, I think that as a mechanism to promote monetary and financial autonomy in Latin America, it is important for them to defend their trade, safeguard their trade, and one of the key mechanisms for it regionally is using the RPAs that are complementary to trade agreements. So thank you so much for your time. For me, it is a pleasure to be here. I read you and I admire so many of you. Thank you so much, Marcelo. So interesting. And I want to remind you that if you have any questions, you can put them in the chat box. And I want to remind you that we do have interpretation to English and Portuguese. So now I'm gonna let Seven Perez have the room to go a little deeper on these topics. He has lots of experience. Many documents you can of his documents you can find them online, and he's a collaborator of ours, a luxury collaborator. Honestly, go ahead, Stephen. Yeah, thank you so much, and thank you, Latin Dad, for this invite. It's a pleasure to share this panel with such well-known researchers. So I'm gonna share my presentation. Can you see it? Yes, perfect.
My presentation is going to be about de-dollarization in Latin America, and I'm going to make 3 points about de-dollarization. The first, that it's a long-standing tradition that goes back perhaps to the 19th century. Second, that we have some experiences whereby we can draw some lessons. And third, that the dollarization as a concept has changed over time. And we have moved to a new concept of dollarization, and dollarization has different dimensions. Dollarization is not the same thing as it used to be, as just having deposit in foreign currency. Today they're tied to the productive structure, and they tied also to a property of money that I think has risen in terms of importance, which is the unit of account, which is the invoicing currency, and which is a leverage currency. If we look at the history of Latin America, there have been attempts at monetary union that have not been successful. The Central American First of all Union, then the Central American Monetary Union in the 1960s. In the 2000s, the Caribbean single market and economy would never passed really, and perhaps never achieved even a customs unions. Then we have the regional payment systems that Marcelo mentioned. We had the lending in local currency. Today, which is lending by multilateral, global, and sub-regional development banks. And we have the development of bond markets in sovereign debt. That has been something that has been pushed to avoid the original sin. The dollar, this is a figure that complements the figures that Marcelo showed for Aladi and for the agreement in local currency between Brazil and Argentina. These are trade operations channeled through the Sucre, which basically declined over time, were never very important, and they were based basically in on Venezuela, which took about 76% of the transactions. What are the lessons that we have learned if we looked at these attempts at de-dollarization in Latin America? There are several, and I'm going to mention just a few. First, there's the issue of large country dependence, and that happened in the Sucre. That happened also at the time when ECLA was pushing for Central American integration and centering periphery among Latin American countries who simply reproduce for Central America. And it also happened in the common single market and economy regarding the role of Trinidad and Tobago. And it happened also when ECLA pushed for expansion of the FLAR, and Brazil did not want to join this initiative. There's no really a specification of how the use of domestic currency and intra-regional trade currency will push and expand intra-regional trade and financial integration. Another issue that we've learned is that the the guides or the proposals for regional integration fail in general to adapt the use of local currency to the local conditions and their levels of development. And I think that's clear of the Sucre, which was based on Keynes' clearing union, but failed really to show, for example, how Sucre holdings could translate in greater investment. It was never made clear, but it was part of the agreement. The incentives for increasing participation of private sector in terms of risk coverage and in terms also of credit insurance and guarantees is very important, and it's not really made explicit who in the end will take the risk, who or what will act as a collateral during these agreements. And that's a thing that really does not is not part generally neither or the normative nor or the laws establishing these agreements or the proposals. And another issue that's important is the issue of productive diversification. If these agreements or regional payments agreements or other instances of greater de-dollarization do not have some kind of productive diversification attached to them, it's going to be very difficult for increasing reciprocal trade, increasing intra-regional trade, or deepening financial integration. And I would like to just finish talking about the currency of repatriation of profits, which is a recent issue that has come up with the local bond market. We've learned that having bond markets in local currency is really irrelevant in the end. That what's relevant is who owns the bonds in local currency, because if they're foreign investor and they repatriate and the currency of the repatriation is the dollar, then we're exactly at the same situation as before. Finally, I would like to just make some comments on what do we mean by dollarization. Dollarization is a term that evolved over time, and we need to take this into consideration if we're going to have de-dollarization proposals. Initially, it was currency substitution. As a substitution in Latin America, not only is it tied to currency substitution as a substitution, it's very much tied to productive structure. And more recently, it is tied to the type of market international capital markets, the bond market, that has become a major source of funding, always for the government, but also for the non-financial corporate sector. Here's deposit dollarization in countries of Latin America and the Caribbean between 2000 and 2020, the minimum, the maximum, and you'll see that dollarization is prevalent in this sense in several countries of the region. This is a graph highlighting the issue of productive structure. This shows the rate of growth of GDP and the rate of growth of gross national real disposable income for Latin American countries and the Dominican Republic. The difference is that GDP does not take into account terms of trade, does not take into account remittances, whereas the real gross national income does. And you'll see the difference that I highlighted in the case of Honduras, for example, where the rate of contraction during COVID was about 9%. But if you take the real gross national income, which takes into account remittances, it was about half. And remittances play a tremendous role in these economies. Generally, we say, well, they foster unproductive consumption, but that's a real part. But they play a very important part in terms of cushioning the business cycle, and they played a very important part in terms of finance. They are a major source of finance for commercial banking, are a major source of reserves, and allow the central bank to maintain the nominal exchange rate at a certain level. So these are benefits. And if we want to talk about de-dollarization, what are we offering instead of benefits such as remittances, which actually reflects a productive structure of some countries exporting labor instead of commodities. And finally, I'd like to talk about the unit of account property. Debt has become debt in the capital markets has become has become generalized across different agents in the economy. If you look at the 1990s, it was basically the general government. If you start from 2009 after the financial crisis, all the different agents like the financial corporation, private banks, especially the non-financial corporations, have increased their holdings of dollars, have increased their debt in the international capital markets, and actually non-financial corporations is the most dynamic holder of issuer of bonds in the international capital markets, and certainly that has implications for investment that I'm going to show you. The first implication that I see in the general government in terms of the unit of account is this. It's the correlation that you have between emerging market bond index and the rate of change on the nominal exchange rate for these are for the major Latin American countries: Argentina, Colombia, Mexico, Peru, Brazil, and Chile, and you will see below the simple correlation coefficients, they tend to increase after the global financial crisis, so that the unit of account property has a very much an impact on risk, on government risk, and the government risk has a causal impact on the non-financial corporate sector risk. The productive structure here and the unit of account is important when you look at the firms that issue bonds in the international capital market, and bonds basically that are denominated in US dollars. This shows from a survey of about 300 companies, of a paper that I've written with a colleague. If you look at the number of issuing firms in manufacturing, there are about 36. Non-issuing firms, 85. But if you look at the total assets, if you look at the share of long-term debt, if you look at the share of investment in property, plant, and equipment, they basically have the bulk of all these financial variables. So that the unit of account matters, because the unit of account, and if changes in any unit of account, changes in the nominal exchange rate, have a direct impact on the companies actually, and on the sectors that are leading sectors in Latin America. And finally, I would like to end showing this graph, which shows the profitability of firms that issue bonds in the capital markets in Latin America versus those that do not. The orange or red line is the bond issuing firms. The blue line is not the non-bond issuing firms for agriculture, construction, information, manufacturing, mining, and quarrying, wholesale trade, transportation, retail trade, and utility. And you will see that in six of the sectors, the bond issuing firms have higher profitability than non-bond issuing firms. The question is the issue is that profitability does not translate into investment. It sometimes has to do with leverage, and sometimes has to do with financial investment. So if we look at dollarization in this way, and if we plan to include or to introduce measures of non-dollarization, what are we offering the productive sectors? What are we offering the countries that receive remittances, and that remittances become a source of cushioning of the business cycle, and that the international bond market denominated in dollars becomes an issue of profitability for the large companies that actually hold the majority of the economic activity in sectors and the investment. And those are key questions if we want to tackle and analyze this problem in a thorough way. Thank you very much.
Thank you very much, Esteban, for your clear and highly available presentation. And now I'd like to give the floor to Artem Levenko, who will share with us the Eurasian experience and the mechanism that have been developed as alternative to the dollar. Please, Artem. Thank you so much.
Thank you very much. It's a pleasure to be here with all of you. Let me share my screen, my presentation. Okay. Do you see the presentation? It's okay.
Not yet, but it's loading.
Okay. Now it's okay. Should I start?
Yes, it's starting now.
I see the presentation on my screen. Do you see on yours?
And not yet,
Not
but
yet.
it's loading.
It's loading. Okay. Okay,
Yeah,
maybe.
probably we can try once again.
Okay,
Yes.
okay. I will try once again. Okay. Okay.
Otherwise, you can send me your presentation and we can.
Let's try one more time.
Yes.
Okay. Does it work?
No yet.
No, not
This is
yet.
still this is still loading. So if you
So
want, it's
I
better
can I
you.
I can send this presentation to you, Jorge, and you
Okay.
will share the screen. One sec, please. Yeah, I send it to you.
Okay. Give me a couple of minutes. Okay, I'm gonna share the screen now.
Oh, very nice. Very nice. Okay,
Okay.
let's start with the first slide. The modern international financial architecture remains largely dollar-centric. According to the IMF estimates, the US dollar accounts for about 58% of global foreign exchange reserves and about 50% of international settlements and the vast majority of commodity trade. Also, I should mention that a lot of bilateral swap arrangements as a second GFSN layer are largely driven by Fed, and they are also denominated in US dollars. The next slide, please. The push for local currency financing by RFAs and IFIs is a strategic shift away from the traditional hard currencies like the US dollar, euro. This shift aims to mitigate foreign exchange risk for borrowing countries, deepen local capital markets, and enhance regional financial stability. While international financial institutions act as global and regional catalysts and facilitators, and IFIs, in many cases, especially multilateral development banks, are pioneers in enhancing local currency lending, especially in emerging markets. You can see these dynamics. Here on the slide, you see the main reasons for the push for local currencies. Actually, mitigating foreign exchange risks is a primary theme. Everyone knows that when countries borrow in foreign currency, and depreciation of their local currency can drastically increase the value of the debt and servicing costs, and the local borrowing eliminates this kind of risk. The second thing is that no. Yeah, this slide, yes. Developing local capital markets, very important. By issuing local currency bonds and providing loans in local currencies, IFIs help to create a benchmark yield curve for the market, to attract domestic and international investors and increase the overall depth and liquidity of such market. Enhancing macroeconomic stability is another reason. Reducing reliance on foreign currency debt makes the country financial system less vulnerable to external shocks and sudden stops in capital flows. The fourth thing is that alignment with long-term projects, infrastructure and social projects generate revenues in local currencies. That is why financing them in local currencies provides like so-called natural hedge for this and improves the project bankability. And the last one is the geopolitical and strategic diversification, also very important. Regions right now from the global south especially are seeking to reduce their dependency on the US dollar-based financial system to make their for their strategic autonomy. Please, the next slide. In this approach, I should highlight the BRICS efforts finding approaches for creating an alternative mechanism in the financial system is a strategic priority for the BRICS countries. And the goal of increasing the role of settlements in national countries for the BRICS was the priority for the BRICS leaders since 2009. And you may notice that in the BRICS economic partnership strategy until 2025, which was adopted in 5 years ago, a separate item is devoted to the issue of international financial architecture, including the role of national currency, cooperation on development of payment systems, deepening bond markets in national currencies, and other areas. Last years, from 2023 till now, the topic of de-dollarization of payments have become one of the priorities. And in 2024, there was a special report while Russian presidency in BRICS, a special reform on possible ways to reform international financial system. And this year, there was a technical report on BRICS cross-border payments, which contains the preferences of the group members regarding international settlements. Next slide, please. Also, I should highlight that in 2024, during Brazilian presidency G20, there were a lot of efforts, and me with my colleague, we established some kind of MDB roadmap for enhancing local currency lending. On this slide, you can see the main themes from this roadmap. MDBs should encourage their shareholders to set specific targets on a percentage of loans in local currencies. How to do it? It's the main question for MDBs and for other international financial institutions. The main thing is to change the business models, especially funding, risk management. High share of loans in local currencies, as I mentioned earlier, could deepen the liquidity of local capital markets and positively affect sovereign debt sustainability. Also, it's very important to know how to use all of these principles in practice. And we have a good example of, for instance, a new development bank, which has a specific objective in the strategy for this period of 2022-2026, a specific figure for local currency lending. I think it's very important to have these figures in strategies of other MDBs. Next slide, please. Despite all of these efforts to enhance local currency lending, we see a lot of challenges and limitations for this process. You can see them on the slide. In many developing countries, local capital markets are not so deep and liquid for this lending. High cost of hedging, institutional regulatory hurdles are also among of the reasons why it's so difficult to boost this lending in local currencies. And I'm a representative of the Eurasian Fund for Stabilization and Development, a regional financing arrangement. And in our institution, we try to enhance lending in local currencies. Please, next slide. Regional financial arrangements are the third layer of global financial safety net. Here on the slide, you see major RFIs. EFSD is working in Eurasian region. And I may say that from 2024, we have in our statutory documents, we have made some changes, and we now may provide financing in local currencies. It's very important for our member states. Our member states are countries from Central Asian Caucasus, as they have a lot of close ties with major economies like Kazakhstan and Russia. So these countries are very interested to receive financing from our institution, not only in US dollars, but also in tenge and in Russian rubles, etc. So the way for enhancing local currency lending is very important. Also, you may see that in CMIM in South Asia, also they do not have any active lending programs, but they are moving forward. They updated their operational guidelines, and they can use local currencies for their future arrangements. So it's very important. And this updated guidelines took effect in January 2022. So this is only the updates from the last years. Also, Arab Monetary Funds, it's using of course US dollars, but they have their Arab account in dinar. It's like something like SDR in IMF. Synthetic value, they have it. So they nominate their lending in this AAD. So it's another way to move from these dollar-centric international financial systems. But we have like BRICS CRA is FLAR, they are operating in US dollars. But regarding BRICS CRA, as far as I know, there are a lot of efforts nowadays to move away from this dollar-centric system and to make some right now negotiations between the countries to have a possibility in BRICS CRA to use not only US dollars. So the process is going on. Please, the next slide. And some figures in Eurasian region, we see the importance of financing in national currencies, both for non-sovereign and sovereign finances. You can see and retrieve more data from our project. You see the QR code on the slide. It's a special project of EFSD. We monitor IFI's financing in the region, and we see the trend of increasing financing in local currencies. You see the growth from 0.4 billion to 1.4 billion. And the major providers of local currency lending in the region for non-sovereign is Eurasian Development Bank, and for sovereign lending we see a lot of nowadays programs from the ADB and other RFIs. So we see from the figures that the process is going on. To be short, it's all about my presentations. Thank you for your attention. Happy to answer your question if you have so. Thank you.
Thank you so much, Artem. Was an excellent presentation about the Russian experience and all these this mechanism that we already have. Well, finally, I'm gonna give the floor to Marina Zucker. She's talk about the internationalization of renminbi and the cross-border international payment system. Is the Chinese experience. So the floor is yours. Thank you.
Okay, I was unmuted. So just checking.
Yeah,
Can you see my screen?
Yeah, perfect.
Okay, awesome. Primeiramente, muito obrigada, Latindar e Brick Center, por convidar para participar dessa discussão. É uma discussão muito importante, especialmente agora. Eu vou falar em inglês. Eu fiz a pesquisa majoritariamente em inglês e em chinês, então eu vou mudar para inglês, que eu me sinto mais confortável. So thank you very much. So Latindad and Brick Center asked me to talk specifically about the SIPS, which is a payment system that the Chinese has developed in the last years. So this research that I'm showing today is mostly based on my PhD. So if you're interested in more aspects of the RMB internationalization, I'm very happy to share with you. We did some work on more political economy, on foreign exchange, RMB role in the foreign exchange markets. Today, I'm going to focus specifically on this article that is more on the payment infrastructure. So if we had 1 minute for me just, to wrap up what is the main argument of this paper. So basically, we know when we look to international currency status that is really highly path dependence. Why? Because that is economies of scale. So more you use, for instance, the dollar in the foreign exchange markets, smaller is what we call the bid-ask spreads. Smaller is the interest rate. So that is more incentives for you to continue to use the dollar. And also there is a lot of network externality. So it's like the English language. We learn English mostly because we know that most people speak English globally. So there is a lot of, given these characteristics, there is a lot of barriers for newcomers that want, to push the internationalization of your domestic currency. So the The argument of my paper is that for newcomers, we need to give us these market forces. The role of central banks play a key role in jumpstarting the currency internationalization process, specifically in reducing the barriers that we see in the market. And a key barrier that I highlight in this paper, it is the role of cross-border payment infrastructure because they reduce what we call the payment friction. And this approach is quite different from what the current literature tells, because we know the current mainstream literature tells that international currency use is mostly because of domestic, the size of the economy, which is true, institutions, interest rate, this is all true, but the literature doesn't give any agency for other countries trying to push currency internationalization. So when you look to the role of central banks, we can actually understand where an agency lies. So we are going, in this paper, I'm going to show a little bit of the evolution. Must say that this is not something that was a fast process, was a very slow evolving process. So this is what I aim to show you. So first question, is the Chinese unique? I think now in the fourth presentation of the day, we have clearly that is not. We have experiences in Eurasia, in Latin America that we talk a little bit. This is a table that is in a forthcoming paper that we're doing with colleagues in University of Berlin and in Leeds University. So basically, we try to map the payment, initiatives globally. We have many cases where the payment initiatives were like multi-currency or regional, local specifically for trade operations. Some of them were cross-border for like tourists that are going, in regions. This is the case of the ASEAN Currency Initiative. So, or in Africa, also it's a case of trade. We have also cases where they are incomplete, where there is no actually payment system, but is message systems where then banks can settle the funds bilaterally, but they can facilitate the message of the banking. The case of the RMB, I would say it's the most complete case in terms that it's a single currency one, so it's a unilateral approach, but it's the one that is more complete because not only there was a network of correspondent banking, but now actually a clearinghouse with international reach. So very quickly, where the internationalization of the RMB stands, we know that now that is a recent BIS 3.0 survey in the foreign exchange market, and we saw recently that the RMB has increased its share to 7 to 85%. It's now the fifth most currency used globally, and it's only international, the only currency from a developing country in the top 10. We know, this is from my PhD, we know that currency internationalization in the case of RMB is really focused in the role of this currency as a medium of exchange. So mostly for trade invoices, this is where RMB is mostly focused. And although when we look to a whole Chinese trade, it's around 30-35% of Chinese trade is actually now settled in RMB. You may say, oh, it's not 100, it's not significant. Actually, when compared to other developing countries, this is very significant because most developing countries, they rely, almost 100% in dollar to make trade. It's important to understand that the Chinese case was a managed internationalization. They tried to pursue the internationalization of the RMB, trying to maintain, to some extent, capital account management, which is something unique. And then in terms of payment infrastructure, when we see the strategy from the central bank, we can see three main processes of increasing payment channels. The first one, especially at the start, is the increase of the correspondent banking accounts. So basically, commercial banks having other accounts, having accounts in RMB in other banks. And this network of correspondent banking allowed the RMB internationalization process, especially at the start. We also saw many Chinese financial institutions going abroad, trying to serve their clients investing abroad. And this is also a new channel for actually more use of the RMB in terms of payment. And finally, we saw the payment system creation by itself. So going a little bit on the evolving integration, we know that China is very, highly integrated in the dollar system. When we see, for instance, the American payment systems in dollar, which is it's the cross-border, the payment system with cross-border reach. In the case of dollar is the chips. And there are, 5 Chinese banks that are direct participants in CHIPS and many others that indirectly. So this enables China to be part of the dollar system. But the RMB system really started to take place during 2009 in a pilot program initiated by the PBOC and other regulators. And it was focused basically on 2 models at the beginning, which was correspondent banking, what I call the domestic agent model, and the clearer bank model. So basically, the difference is which are the commercial, where the commercial bank accesses the Chinese clearing bank, which is the Synapse HVPS, which stands for the Chinese National Advanced Payment Systems, High Value Payment Systems, which is basically the central bank clearinghouse. So at the start, foreign banks could access the clearinghouse, the Chinese clearinghouse, one via a correspondent banking in mainland China, based for instance in Shanghai, in Beijing, or they also had the option to access through Hong Kong. And because of the role of Hong Kong as a very strong financial center in Asia, this really pick up, the second model really pick up. So a lot of payments went through Hong Kong. So about 70% at the time. And it's also important to understand that there was initial restriction of the use of RMB accounts. At the beginning, when the pilot scheme started, it was only 360 companies that were approved to do it. There was, over time, there was geographical expansion. At the beginning, only 20 provinces could be allowed to actually do RMB payments. Over time, they increased to exporter with more companies allowed to do it. They increased the number of transactions, so they start to allow FDI. And we saw over time the number of this correspondent relationship really growing over time. So it was really an organic process. As I mentioned, the second channel was the participation of the Chinese banks abroad. This is just showing the foreign direct investments of financial institutions going abroad, showing their increasing presence. Also, there was an increasing number of offshore RMB clearing banks over time, mostly the Chinese state-owned banks were there. But over time, there was a lot of challenges. As the RMB use started to pick up, there was a lot of technical challenges that prevailed further expansion of the payments. And we saw problems, for instance, in terms of time zones. So the Synapse, the clearinghouse, there was not overlap with major financial centers. So if you are making RMB payments from New York to US, we do take 2-3 days at least because of the differences in time changes. There was problem with the Chinese code. So there was a lot, because of the Chinese code was not overlapping with the dollar one, there's a lot of payment rejection over time. And this caused a lot of delay to banks. However, so from this need to speed up the payment process, the PBOC created the SIPs. There was also increased expansion over time. So at the beginning was just trade, and then they expanded to financial messages. The SIPs, they have a message standards that is compatible of English and Chinese, so they mitigate the problem of translation. And they also make the SIPs convertible to the Swift code, which is the key message system among commercial banks. But they also make it independent, which has very important political implications. And also they expanded the time operation of the SIPs, which actually allow it to have overlap with all major financial centers and then speed up payments. This is just a figure showing how the expansion of the SIPs in terms of number of participants and volumes. Over time, we saw a pickup in recent years, especially. But this is important. I'm just wrapping up. I think the SIPs was very fast increase, but it's also important to not overweight the importance of the SIPs. Comparing with the CHIPS, the Chinese case, so I did in the left is the numbers of the SIPs, and the right, the US case. They are really like the number, it's like 10%, 20% of So the chips is much larger than it is. And also the regional, there is a lot of regional focus of the Chinese case, the SIPs in Asia. So related to the economic relations China with in the region. So just two more slides to summarize that, to actually give a little bit of nuance. Of course, the argument of this paper is that the payment infrastructures play a very important role in reducing the friction and increasing the acceptability of the currency. But this is not only the fact, of course. Interest rates play a very important role. So if you see, for instance, recently the Chinese use of China RMB internationally has increased. And that is one explanation is now that is borrowing in RMB is cheaper than borrowing dollars, for instance, if we consider foreign exchange, remaining stable. So the basic interest rate is very important, and I think for Latin America, where especially in Brazil, interest rate is very high. So there's it's very costly for exporters or others to actually borrowing in reais. So I think the interest rate is a key component of this. But also, this is from other paper that I did with Pedro Perfeito, my co-author. We also show that, for instance, in the case of the foreign exchange markets, higher RMB use is also connected for you to having a clearing bank abroad, if there is currency direct trading between RMB and local currency, if the country has economic proximity with China. Other factors is, for instance, if there is a financial center, investment quotas. So there is a lot of very specific factors that also boost. But overall, we show that payment systems are very reduce the payment frictions. So yeah, so just concluding, I think this study shows that is given the highly dependence of payment dollar use international monetary system, central banks can play an important role to jumpstart currency internationalization process and hence de-dollarization. There are many factors that influence, but cross-border is one of them. And also we need to take into account that this is not a process that is going to happen overnight, but this is something that is an evolving network. But countries need to start from somewhere, and China started in 2009. So that's all. Thank you very much. Yeah.
Thank you so much, Marina. I totally agree. China is one of the main actors in the dollarization process. So yeah, I totally agree. Now, well, first of all, I need to say thanks to all of the speakers. But now I'm gonna give the floor to Ana Garcia. We will share her final reflections before to move on the question and answer session. So please, Ana. Thank you.
Thank you, Jorge, and all colleagues and friends who are here, also the public that we have around 50 people. I will switch what Marina did. Marina started in Portuguese and then went to English. I will now start in Portuguese as I agree that with Latindad. Bom, muito bom dia.
Good morning, everyone. I'm going to try to be brief due to the limitation in time whether the colleagues have. I want to thank Latindad and in the name of Greeks Policy Center for the partnership that we have with them. And I think it's important to follow up with our partnership in this topic, particularly in currency and financial, that has to do with the BRICS countries. And I want to thank the colleagues in the table for their presentations. I'm gonna bring general comments and questions for all of the participants. So the first one is that it's pretty evident, and it's important to highlight also that the currency is a technical and economical topic, but it depends on the political power. And therefore, the dependency on the dollar still so relevant, facing the construction of the North American hegemony since the beginning of the 20th century, but more accelerated after the post-war with the economic institutions that support the American hegemony. The power of the dollar was expanded before the war in your article, Marina, but actually the dollar becomes the global currency exceeding gold after the war, and starting on the 70s, which in Brazil we call the flexible dollar. And the debate that we have today regarding de-dollarization or another topic, the increasing use of local currencies that uh, still do not replace the dollar. That's important to say. It's a debate that uh, has to do with the crisis or lack of thereof of the American hegemony and what alternatives are coming in the international system for the reorganization of the political power connected to the economical power. Therefore, it's important the importance of the topic of China and the BRICS. As many have debated, it's known the debate about the privileges of the dollar and the extravagant privileges that happen both in the power of the United States of financing the military system, international military system, the expansion of their companies, but now particularly their capacity to of public indebtedness. That is a privilege that only the Americans have, and that great crisis of debt that we have in the global South. I'm gonna leave that topic, Marta, about the use of the terms these countries, developing countries and the periphery, the global south that I believe is important. Only the Americans have those main privileges in their capacity of indebtedness, with many consequences, but with limitations in their own currency. But beyond the privilege, there's a cost, a burden of being a global currency, and that imposes hurdles to China and also to the BRICS. It's not simple to becoming a currency of global use without altering, disrupting important matrices in the national economy of a country, meaning becoming a lender in an instance, having a financial system that is completely open to international compensations, being able to fund other countries in a more comprehensive way. And right now, China doesn't show still neither the capacity or the political will to assume that role. So we are in a crisis of hegemony, a transition of hegemony, because we still don't have a currency that can actually substitute the dollar. As Dr. Steven said, so if it's not the dollar, what is? That is a question that we have. So one element that I saw in all the presentations was the moments of crisis, that are moments that effectively incentivize or bring openness to the use of local currencies. In Latin America, we have the debt crisis, then the crisis in 2008, the systems like Marina said that was pushed by the crisis in 2008, or the case of Russia or the Eurasia region, as Adam said, the crisis after the wars and conflicts, and the dollar being used as an instrument of war, right? As some of the economist colleagues in Brazil call the dollar bomb, the dollar being used as a sanction mechanism against countries in war, such as the case in Russia, and that incentivized Russia in the BRICS presidency in 2024 to propose a group of mechanisms to increase the use of local currency. So I would like the colleagues to comment that element, the disparity between the political element and the technical element, or the political will to de-dollarize, to de-dollarize. The technical difficulties are relevant, and the central banks as key pieces and more conservative in the BRICS. I feel that Mariva made a great presentations in terms of the use of the central bank in China, but in the moments of crisis, even with technical difficulties, those actors see an opportunity to increase the use of local currencies. Then, in the most current moment that we're living, the topic about if it's not the dollar, which currency? What is the place of digital currencies? Understanding that they do not substitute a strong currency or solid currency like the central banks have, but what is the role of digital currencies? If that is a potential alternative here in the region of Latin America or even in the BRICS countries. And another current topic is the use of the American Central Bank and the American government of the devalorization of the dollar to try and compensate some effect of the tariffs. And that has been discussed. The dollar is devaluating since January this year, quite fast. And many of the debates are trying to see how that can try and mitigate the possible effects of vulnerability of the tariffs. I would like to discuss that. And now to close, the capacity or lack thereof of the group of countries in the BRICS to advance the use of local currency and looking on a way to mechanisms. The CNA, which is reserves, and the new Bank of Development. Or does this mean to lend, make lendings, right, to projects of the countries in local currency, around 26%, and the other one is a mechanism of compensation in lendings as effectively, which is the CRA, which is in the banks of the central banks, the BRICS, and therefore it gives a more conservative aspect, a more conservative nature, less exposition to risk that the central banks have. So I would like to know the opinion of the colleagues in the table about which one of those mechanisms could advance in the BRICS environment. So I'm going to leave you to you. Thank you so much, Anna. So I think that we can answer Anna and her questions in order. Taking in consideration that Steven is going to be leaving in a few minutes, sadly, so we can start with them. And then we can continue in the order of the presentations. So then we can finish with the Q&A that we have in the chat box. We have a few. So Steven, we can start with you. Thank you. Okay. So I'm gonna answer some of the chat questions because I saw that there was some directed to me, as you wish.
Regarding the issue of political will, I think that's central to create an alternative to the US dollar. And what I've seen in Latin America, and from my experience, is effectively, in some cases, a lack of political will. And the idea to create sort of an alternative to the dollar or the dollar coexisting with other types of arrangements in local currencies requires some type of integration agreement. Now, the problem that I've seen with integration agreements sometimes is, besides obviously the lack of political will, is the lack of realism of those regional agreements. And I'm gonna illustrate with a precise case, which is a Caribbean single market and economy that was created in the 2000s, was supposed to come to, flourish in the late 2000s. It was meant to be sort of a replica of the European Union, but applied to the Caribbean. And the way it was structured like a textbook transition to a monetary union, where you would have sort of customs union, then you have capital integration and a currency union. And when you talk to the banks at that time, the financial sector, they said the financial sector is integrated. And it becomes integrated before the real sector or customs unions exist. And that's what I mean by realism and political will. That would be my answer to Anna. But I have not seen political will as yet for an alternative currency. Regarding, I had a couple of questions. One regarding I think that was sort of regarding the lending in the local bond market. Well, if the presence of foreign investors in local bond markets is represent a large share or investors in the local markets, and the foreign investors have the currency in which they repatriate, which is the dollar, you may have a capital outflow if given considerations of whether you're hedged or not and so on. The capital outflow has an effect on the nominal exchange rate. The nominal exchange rate has an effect on sovereign risk. Sovereign risk has an effect on the risk of the non-financial corporate sector. In addition, since most firms in the developing world, operate under currency mismatch, you would have a negative balance of payments effect. This may constrain through different channels investment. So you may have all of those channels by trying to develop the local market, trying to think that by developing the local market, you're going to avoid those channels. If you add, for example, and with this I finish, during the pandemic where everyone was so happy because they offered low interest rates and large maturity rates, they forgot to take into account the maturity risk. And when there are devaluations with a high maturity risk, the impact on the exchange rate and on the local conditions of the economy may be quite significant. Thank you.
Thank you so much, Stephen. So now we can start with Marcelo. And so first I wanted to answer the question from Anna. And then we have some questions in the chat box. So I can help you find them and I'll tell you what those are. So the first one is, how do economic asymmetries impact the failure in the balance of these agreements, these regional payment agreements? And the second one is, how do we deal with a regional payment agreement in local currency in a country that is permanently in devaluation? So I'm gonna let you speak, Marcelo. I think Marcelo is frozen. Um, so in the meantime, as he gets connected again, can we move forward with?
Online. Probably we can start with Marina, because unfortunately Artem gone, so we can start with Marina.
I have three main points. Uh, I have three main points I think that Anna mentioned that are very important. So the first thing is how people live. So first, people have to have a political will, right? Of trying to reduce the exposition to dollar. And from there, what are the technical solutions? I think that having a leap that is might be obvious, and sometimes it starts from people thinking about microeconomic things. In the end, we want to reduce exposition to the dollar, but who's gonna decide dollar or not? It's the companies, the banks. So what are the reductions of cost of transactions that people can think about that are going to stimulate them to use local currency? So things that I've seen in China during my PhD was companies or banks that were saying, okay, if we when I used a dollar, I was making a lot of transactions in network and it was very costly. So now, since I'm using the RMB, I don't have to have those transactional costs. So that's why I adopted it. So in the end, those are micro decisions that are made from the perspective of the central bank, from the Ministry of Finances. They have to think, what are the micro stimulus that are gonna have an incidence on the macro impacts? So I think that that is a key aspect. And we've seen that in the case of the Mercosur a regional agreement with Brazil and Argentina, many of the companies decided to use the local currency due to the reduction in transactional costs. That's the first point. The second point, um, people also have to think about collective solutions. So I think that the case of RMB is a success case. It is a success case from China to reduce some of the vulnerabilities to the dollar. But in cases such as Brazil or others, what is the advantage of simply substituting the dollar with another currency, a foreign currency, the euro, the RMB? What are the collective solutions that we can think about, the breaks regionally, to actually have transactions of local currency that have an edge? Because that provide a win-win. Of course, there are more complex things. Any change or exchange rate or exchange currency exchange is going to have some rate. Uh, so we have micro things, but what is a collective solution that we can look for? And the second, sorry, the last point that Anna mentioned, which is these are very critical in their paper, honestly, if they can actually attain helping the countries. Of course, we have countries of private currency, Cuba, Argentina, that are used by citizens to make transfers, imports that could not be made otherwise. But if we think about more important economies or bigger, such as Brazil, for example, I'm actually working on a paper right now in an article related to the exposition of Brazil in the payment balance. What is the importance of the fintechs of the cryptocurrency? If we see in Brazil last year, we had a superávit in the trade balance. We had a trade superávit, and we spent buying cryptocurrency. So, what is the issue in the payment balance of having all of this exposition? So these new technologies can lead to a new dollarization process if we don't take care of ourselves instead of creating new economical policy spaces. Thank you. Thank you so much. So now we can finish with Marcelo. He's back. So again, to answer Anna and the questions that we have in the chat box, I'm gonna let you speak, Marcelo. Thank you. Thank you so much, and I apologize. I had some issues with the internet connection. Honestly, what Anna said was quite interesting. It's a technical issue, political issue, and it's clear uh, from what we've heard from the speakers is that it's mainly a political issue. The technical issue, I think that it's pretty simple. Even now with the digital currency, particularly those issued by central banks, can even facilitate any technical issue. There's no difficulty in itself. The biggest technical issue is the lack of trade balances. So maybe there's a region of countries that had chronic superavits and others that have chronic deficits. Then we need to see that, and there is an issue there because we're talking about a productive issue and an issue that has to do with the productive structure of each country and not just with the payment issue. So, in first instance, I think that the reason for which our payment systems always have hurdles is just political, lack of political enthusiasm beyond the discourse, but in effect, nothing's been done concretely. On the other side, I think that is very interesting, something that Anna's highlighted, which has to do with how in the crisis context, the local currencies or the regional currencies thrive. And in that point, I thought it was very interesting because we have the 30s on the one side, the 80s in Latin America, and now more recently, what is happening now. And yeah, there can be challenges because we can see monetary blocks being created, trade blocks that can generate challenges for the countries in order to defend their currencies from the bigger countries to be interested in a sustain currency stability like happened in the 30s to try to sustain their power, at least in a segment in the world and not in the whole world. So I think that is important for Latin America. The um, desperation of a unified hegemony. And last comment, I think that is interested to highlight in the monetary theory. One of the first things that we learn that money is credit, and when we think that money is credit, it is applied to the multilateral or the regional payment agreements because we issue money to make international payments. At the same time, we are granting a loan. It's not that it is something that has been agreed beforehand, but you are creating it in a way. You're creating deposits, and therefore that makes our economical system works. And we have to think about that in international terms. And I think that's interesting, not separating those two things. I think that there were some questions regarding the problems of asymmetry between Brazil and Argentina or between Ecuador and Venezuela in terms of the balances. If there's a currency that is very weak, that has issues permanently, can be able to incorporate in a payment agreement. And in that sense, I think that the payment agreements do not solve domestic issues. They can help you, but if you have a currency that is being devalued a month after month, it is very hard for exporters to want it. So there we have an issue. So in countries again, the payment agreements are not instruments of synergy, but there are policies within policies that have to do with regional integration and also with economical development. So therefore, I think that, well, I hope that I answered your questions. Thank you so much, Marcelo, Marina, Ana. So we only have 5 minutes. We have one question in the chat box. I think that Marina can provide an answer to this question. It's from Bhumika. I don't know if you can see it.
I don't know if you can see the question, Marina, in the question and answer box.
Oh, in the Q&A.
Otherwise,
Okay.
yeah.
For balance.
Can you please expand the role of the diversifying forex or reserves, especially through gold accumulation right now, led by China, and whether is this more critical leverage break dollar dependency relative to trade and goods payments? More specifically, given the central role of reserve accumulation to the inequality bias, whereby the South finance are not in the net flows, while the South sacrifice ability to productively use its forex earnings, how to address reserves.
Maybe I could jump on. This is a very good point. I think that I think the run to the gold is especially geopolitical uncertainties, especially after the conflict in Europe and how the dollar was weaponized. There is a lot of demand. We saw one of the reasons gold price is record high is this, right? In terms of uncertainty, the gold is the safe asset, especially when there are questions about the role of the dollar. We know that in cases of the RMB, the use for reserves is relatively low, just 2%. I think we are going to have, distributional problem if the foreign currency, if the reserves is in any foreign currency. Something that we have put forward is to think about, multi-currency reserve. So this is something that show up, for instance, in the Stiglitz report, and I think 2010 he did this work to the UN where he highlighted, the possibility of having a multi-currency reserve. Recently, we published a paper called Sustainable Future Bonds. So we suggested that actually reserves could be the liabilities of multilateral development banks. So actually would be like a shared currency ones. I think like there are feasible solutions to do something that is more shared. But I completely agree. There are very high costs of keeping high levels of reserves, and by doing this, you are allowing the U.S. to continuing, financing the disequilibrium in the fiscal disequilibrium, basically. Yeah. I hope this answers.
Well, with
Thank you so
this,
much,
I want
Marina.
to thank everybody, all the
Bueno,
panelists.
pues
Thank you,
con
Ana.
esto,
With this,
muchas
we're going to
gracias a
wrap up
todos
this
los
webinar.
panelistas, muchas gracias, Ana.
Esteban,
Con
thank you
esto
so much.
damos
You
por
actually stayed
terminado el
till the
webinar.
end. Well,
Esteban,
I
muchas
just
gracias,
want to
te quedaste
invite
hasta el
you
final.
to read this document, which
Pues
was recently
nada más los
published by Marcelo.
invitamos
It's already in
a
the
leer el
network. It's
documento
been
recién publicado
shared
por
in the
Marcelo,
chat,
está colgado en la
both in
red, ya
English and
se compartió
Spanish.
también
And we're going to
por el
continue
chat,
to be in
tanto en
touch for
español como en
future
inglés,
topics. So thank you so much,
y
everyone.
seguimos en contacto
Thank
para
you.
futuros
Pleasure.
temas. Muchísimas gracias a
Thanks.
todos.
Bye. Thanks.
Muchas gracias, un placer. Adiós.